Well, now what? Early.
Well,
Does it matter?
turn the heat up. What is that? I think
Being close the door.
Yeah. Yeah.
It's like cold air coming.
Okay.
That's good. Yeah.
Oh, yeah.
Is there anybody else on Zoom? Anybody?
No, we have no attendees.
Okay, we'll call a meeting order. I won't wait exactly. So being 2:00 minus 1. Oh, meeting to order. I guess we have a roll call? No, 2 of us are here. We don't need a roll call. Get my glasses on so I can see.
Chair Riley, is your mic on? Just a reminder, please
My
have your
mic
mics
is
on.
on, yeah.
Okay,
All right. So we're convening the committee meeting of Finance and Administration. Call all roll call. Okay, two of us are present, and that's a quorum. Any additions or correction to the agenda?
There are none.
All right, no public that we're aware of, so we will proceed with action items. Item number 1, the minutes for the last meeting. I went over the minutes and I saw nothing that I wanted to change, so I'd recommend, or I'd move approval. It's accepting, aren't we? Yes, I move we accept the minutes.
Second.
Okay, all in favor, say aye.
Aye.
Motion carries 2-0, 1 absent. Item number 2 is budgeted funds for conservation equipment. Hi.
Hi. Good afternoon, board members. I'm Kyle Smith with the Water Demand Division.
Can I just stop you just for
Yeah.
a minute? I just want to say, he was at my house just a week ago. Inspecting my water outlets, and the number that I had was in.
Amnesty?
It might have been called amnesty.
Yes.
Is he a scofflaw?
Yeah, let's not go into details, but it was nice seeing you again.
All right. So I prepared the shower buckets and loaded them up with all of the water saving devices that we give out during the event time of the year. So starting this spring with Earth Day and running through end of September, which would be or beginning of September with the fair. We also give away the shower heads and faucet aerators to properties that are transferring ownership to get them into compliance with our water efficiency requirements. So if anybody has any questions, I'd be happy to answer them.
I have a question. Does Cal-Am buy these essentially in the same general volume that you do? Is it equal kind of?
I'm not sure on the exact volume, but it is fairly equal. We do, when we go to an event that we're both going to be at, we will split. You know, someone's going to bring shower heads this time, or hose nozzles, or that sort of thing.
Yeah, we do more across the counter trade. It's kind of like.
Counter trade here, yeah.
Yeah, towns made themselves so user unfriendly over.
Yeah.
And we take a supply in our car too, so when we're out there for the first time for a transfer of ownership inspection. If they need a couple of faucet aerators or shower heads to get them into compliance, we'll just give them there during the inspection.
That's good.
Yeah.
I just had no idea how many ways you can do this. Goodwill. Customer relations.
Yep.
How many staff people do you normally have on the volunteer list to kind of do these events?
Well, it's myself and Trisha are the main two. And then staff will fill in as needed. I know Stephanie Kister will help out. A few others have helped out in the past.
Yeah, well, that's good. I mean, I know we've approved these things in the past, but I just haven't had an inquiry about how it works. Anyway, this is interesting to me.
And do you go through like your stock pretty much for the whole year? Do you?
Yeah, I mean, you can go in the garage and our section is pretty barren at this point.
Yeah,
Yeah. So these quantities will get us through the whole year.
So it's good that you can still have two suppliers that you can get quotes from.
Yeah,
That's, I mean, that's good to see.
and those are the ones, I mean, we get together conferences and trade shows. And these are the people that we see there most often. So, yeah, they're the two one-stop shops. There would be
Mhm.
a real piecemeal of going to a bunch of different vendors. Otherwise,
Yeah, this is good. I was looking at a lot of these items. There's a few I want.
we have a shopping list.
Okay, so this is a recommendation to what? Recommend to the board that this transaction occur?
correct.
Okay, I'll move that also.
Second,
All in favor, say aye.
aye.
Aye. Motion carries 2-1, I said 1 abstention.
Thank you very much.
Thank you, Kyle.
Thank you.
So the treasurer's report for December, this is to adopt this ask the board to adopt it. Okay,
Yeah, good afternoon, Chair, and welcome, Ms. Landor.
Thank you.
I'll go over the next 4 items on the agenda,
okay.
starting with the treasurer's report, and I don't mind providing a little bit of orientation for the benefit of Ms. Landor here. So this is a routine item. Sorry, yeah. You can see my face. So this is a routine item that comes in front of the committee and the board every month. And there are typically 3 exhibits here. The first one's called the treasurer's report, which shows the starting and ending cash and investment balances, and then the funds and disbursements that are going in and out from the various accounts that we have. And then the second exhibit is a listing of cash disbursements. These are checks and virtual payments that have been distributed for the month of December. And then the third one is a statement of revenues and expenditures. And the difference between the third report and the first report is the timing in which the expense or revenue is posted. So for instance, we might get an invoice in month 1. So the work is performed let's say the work is performed in month 1, then we get an invoice in the second month from the vendor, and then we pay the third month. So the treasurer's report will show when the funds were dispersed, and the statement of revenues and expenses, that's going to show when the expense was incurred.
Got it.
Or when the revenue was incurred. So that's the main difference. What I typically do is share my screen, and I'll provide a few highlights. So if you look at the column that's second from the last, on the top right, it shows the beginning balance. So we have 2 bank accounts. There's a checking account and a money market account. And then we have 3 investment accounts, one with California Class, one with LAIF, which is the local agency investment fund. This is maintained by the state of California. And then we have multi-bank securities. These are all bank CDs that we have. So between those 2 bank accounts and the 3 investment accounts, we started the month of December with 29.9 million and ended the month with 30.5 million. And here in one of the subtotals, you can see the total disbursements that were made, which amounted to 3.2 million for the month of December. And then we also made rebate payments for 21,000 for the same month. And the rebate payments are, we pay customer rebates when someone installs a water efficiency fixture. And that's one of the real impacts that the district has by giving out those rebates, and we influence the demand. for water through that program. Exhibit B, I won't go into the details here, but that's a listing of checks and virtual payments. And then Exhibit C, which I'll cover in the next report, is the statement of revenues and expenses. And I'll provide a summary of this in the next action item that we have. That's the second quarter financial report. So that concludes my treasurer's report for.
Can I slow you down just a little bit? On page 32, just at the top title area. I thought in the past, I've seen the word rebates as the top of the column, but I didn't see it on this list. I assumed that this is the page. These two pages are rebates,
Yeah,
and I was just, scrolling through and looking for, I see rebates on the page before. But I didn't see it I see it on page 31, but I didn't see it on page 32. That's all. I was just trying to,
yeah, we can look into this. This is a standard report that comes out of our financial system. And we'll have to see if something was changed on the header while we were formatting this, or. That's a good point. We'll make sure we include the heading on top for rebates.
it's picky. Sorry about that.
I appreciate that.
And I have no questions about the report itself. But on C3, I will come back to this page based on another question I have later on.
Okay.
Becca, do you have any questions that you would like to pursue? Just
No questions.
Curious.
I was curious about what you addressed to the virtual payments being rebates. I assumed, but you never like to assume, but you answered that, asked and answered, so.
We have a third-party provider that issues virtual checks. And so disbursements, so usually we have a batch that we send out to them and they just make those disbursements.
Right.
So wherever you see the word virtual payment, that means we employed that third-party provider,
Got it.
Corpay, that's the name of the vendor.
So,
No questions.
so can you walk me through the rebate process again? Just the cycle, you said it earlier about you get a purchase order or a sales slip or something. The rebates submitted to the
Well, it's
district
yeah.
pays the vendor, pays the homeowner. Just track me through that.
I am happy to walk you through this.
Okay.
So when somebody purchases an item that qualifies for a rebate, they fill out an application. Send in the application with the original receipts or receipts. We received them because the district wanted to be in charge of making sure that people got rebates only for voluntary retrofits, not for things that are required. And so this is why the CalAm, so it's CalAm and the district together on the program for the most part. We process everything to make sure that it's all voluntary retrofits. Once we verified that the device is something they weren't required to put in, then we put it into our system. At the end of the month, I'll run a report, which is what shows up in your conservation reports. And then we send to our accounting office a spreadsheet that lists the names and amounts and all that information for each of the rebates. What the accounting office will do is put it into their system. And we've had two different things happen recently in the last 2 years. Normally, we invoice CalAm for the rebates that are in the CalAm service area. CalAm sends us back reimbursement for the invoice. And at that time, the district will have our vendor, which I think you're talking about the vendor here, actually cut the rebate checks and send the checks to the property owner. In the past year, because we were in the middle of a general rate case that drug on and on and on, the district has actually been funding rebates. In fact, I think I don't even know if we've gotten a check yet.
We did. December, yeah.
So they finally got approval in December for their rate case that started a year ago. But in the interim, the district was funding all the rebates. So now we've invoiced for everything we did last year, which we've gotten paid for hopefully.
Yeah.
And anyway, so that's how that works.
Okay, well. I
What do you want me to know?
I had a question before, but as you know, sometimes doesn't stay.
So those rebates are reimbursable. And we regularly bill Callum, and Callum will hold on to those rebates. You know, in this case, they held on for like 6 months and then they paid us in December. Because
After
their
they
rate
got
was
their own
funding.
PUC approval.
Yeah.
How long does it take for the customer to get their rebate?
Good question.
Normally, it can take up to 3 months.
Okay,
So at the district, when somebody sends in their application, we hold so we process them in our office. But we don't run them and send a report to the accounting until the end of the month.
okay.
So if you submit it on the first, you've already got 1 month in there. If you submit it on the 30th, you're 2 days in. It goes up to our accounting office. They send CalAm the invoice, and it can take CalAm a month to actually get us paid on the invoice. Once we get that money back, then we have to go through the process of having our vendor cut the checks and send them. So the maximum time is about 3 months. Hopefully, it's less time than that.
Excellent, thank you.
It's not bad. It's a rebate. Come on.
Yeah, I don't have any further questions.
Okay, well, I'll make a motion again that we recommend board approval of this.
Second.
report. All in favor, say aye.
Aye.
Aye. Ayes have it, 2, 1 absent. Item number 4 is another report from our stellar financial manager.
Thanks, Chair. Yeah, this item is the second quarter financial report for the current fiscal year. And I'll just provide the highlights. And again, if you can see on the screen. So what we're doing here is we are comparing the actual revenue and the actual expense incurred with the year-to-date budget. So if we have a budget of 42 million, then we are comparing the actuals with 50% of the budget at mid-year. And that's what you see on Exhibit A. So just going at a very high level, the total revenues received at mid-year were about 80% of our year-to-date budget. And that variance is mostly because of the water supply charge, which we haven't received and which we won't for this fiscal year. And then going down on the expenditure side, we have incurred expenses that are 53% of our year-to-date budget. And if you look at the exhibits B and C, you'll see the major reasons for those variance. So this is Exhibit B, which compares the year-to-date budget in black with the year-to-date actual revenues in white or gray. And you can see that the big variance is happening. Oh, I can write here. The water supply charge, 1.7 million hasn't been received. Property taxes, we actually received 16% more than the year-to-date budget. User fees, we have received about 10% more than year-to-date budget. Pure water, Montreal water sales are at 5% less than year-to-date budget. And then the biggest variance is here in the reimbursement column, and that's the pure water expansion project. This is based on the actual pace of spending. So this is a reimbursement for how far along we are for that project. So this is the cost for the main variance, and then there's also grants. These are the IRWM 1 and 2 grants, and we haven't received any revenues because these are again reimbursable. So our capital projects and grants are contributing to the biggest variance. And then I'll just go over the next graph as well, which is comparing the year-to-date budget with the expenditures. And here you can see that we are slightly higher on the personnel expenses. Our services and supplies is slightly lower, I think about 8% lower. And then the biggest variance is under project expenditures, which is again the reimbursement piece that I just mentioned. And then election expenses, reserves, and contingencies, those are very small drivers, and we typically book reserves at the end of the fiscal year. And that's my short report.
So when you say fiscal year ending, this is a full year's of tally? What's,
On Exhibit A,
well, when you say fiscal year ending December 31, is that all 2024 or is that only from June or July?
July through December.
Okay, that's what,
Yeah, so July through December budget versus July through December revenues or expenses.
okay, I don't have any questions about the numbers.
I don't have any questions. I want to commend you on your narrative. That really helped me considerably.
I'm glad to hear that.
Yeah, how to explain a financial chart? I'm still going to raise a question that's not particularly substantive. Maybe. But I continue to feel like there could be a better way to present project data, reimbursement grants and reimbursements and what's carried forward and what's not and so on. Because I'm kind of more focused on what are the operational patterns that we have. And the grant piece of that just throws the numbers, you know, in a crazy direction all the time. And I didn't know if there's a way to kind of break that out so it's separated out from just operational expenses. I'm assuming operational expenses are going to be reasonably flat or, you know, just slowly
Right.
progressing in an upward direction.
Yeah,
Same with S&S and I don't know about fixed assets and so on, but I do have an interest in trying to understand what are the operational expenses as we go forward. What are the investment patterns that we're looking at in terms of revenue? And both of those, to me, get messed up with project costs or grant costs.
yeah, I totally see what you're saying, and maybe I can try responding to it, and then in terms of illustration and better presentation, I think we can take some steps towards that. But if you look at Exhibit C, the first two columns are operations.
Wait a minute, let me get back to, we're looking at 4C?
Exhibit 4C, yes.
4C, okay. Oh, wait a minute, there's not a 4C.
It's on the screen.
Oh,
Um,
all right. Oh, okay, I see it.
so this is operations,
Uh-huh.
and that's operations, sorry, and this
Okay.
is projects, and you're right, because the project expenses are so high, they dwarf our operations expenses. And so in this chart, we are trying to present both together. But as you can see, our operations are pretty much as expected. You know, there's a minor variance within plus or minus 10%, but it's the capital project spending that seems to be, you know, have a very high variance, and that's kind of, so we could break those pieces out, maybe provide it in different graphs, or maybe provide greater detail for the project expenditure piece.
Well, and maybe just break it out in the explanation.
Mm-hmm.
You can just say, you know, operational expenses, or just treat the project expense separately. Just try to identify. I don't know. I just want you to play with it a little bit and see what you might.
Well, to your point on page 47, we have broken out, this is the mid-year budget. We try to break out the operations and the project. You'll see like Exhibit 5B and 5C, but I'll get to that in the next item. But we are moving towards that, trying to break them out, so you know, it's just better illustration.
Okay, and then it's not a big issue with me, but it is in a presentation. I've got to go struggle around with doing different thought process when I look at that. Okay, that just, if you just kind of see what you might come up with, I'd appreciate it.
It might become very boring though, because those services and supplies, it's fairly predictable.
Yeah.
The personnel, it's salaries, very predictable.
Yeah,
So the standard operations would be very predictable month to month to month.
Mhm.
And even our consultants under contract, they'll bill the same monthly amount every month. And so it's, as I said, it's very boring. And it's really these variances in the timing of actual construction. So construction either gets delayed due to supply chain issues,
Mhm.
or it just gets delayed. In our case, I think it's billing issues and then reimbursement issues. So we've got these two grants that we figured would already have come in, that the reimbursements would have already come in, but Monterey One Water's slower billing us, and then we're slower billing the state. And that's where your variance happens, so. Yeah, we can make it more boring.
Well, what you might end up doing is having a paragraph in the revenue. You can say operational expenses, and you're gonna say literally no change. Project expenses, and then you can kind of identify just what's changing there. And just call attention to it in a way that is different than just part of the mix.
Yeah, and it may just be in the staff report, in the
Mhm.
narrative. as you said.
Yeah, and that may be what I'm looking for.
Maybe we can even color code the graphs. That's like capital and the rest is, yeah, we could play around.
Get out the crayon.
Oh, excuse me.
So what are we recommending here? That this be, let me see.
It's just receiving the second quarter financial report for the
So,
current fiscal year.
Got a motion also to receive?
You don't have to make a motion to receive it because it's been received. So
Because we
if you'd
received
like
it.
to, you certainly can.
Well, we have, I move we receive the report just so it's an action item.
Second.
All in favor, say aye.
Aye.
Ayes have it. Okay. Now, let me just make sure because I want to go back to 33, and I'm wondering if this is my next one.
Exhibit 3C on page
No,
35.
no, okay, we're just, okay, no, I'm okay. So item 5, adoption of mid-year budget adjustment.
Yeah, so the item 5 is to recommend adoption of mid-year adjustments for the current fiscal year. And I'll be providing a presentation to the board, but right now I'll just go over the main highlights of the change. So the district adopted the original budget for 42.8 million in June of last calendar year. And in this mid-year, staff is proposing an additional budget of about 1.95 million. So the new budget would come out to 44.8 million. And I'll just go over the expenditure side first. And so, and here you can see the original adopted budget at 42.8, and the amended or the proposed budget is at 44.8. The total variance is 1.95 million. And so the main drivers for those variance is personal expenses are high by 475,000, and that's mostly the main MOUs that we adopted in July of this year. And then the services and supplies budget is high by 625,000. And for that, I'm going to go over Exhibit 5B, which shows the breakdown of those expenditures, and it's right here on the screen. Now most of that 625,000 increase is coming from this legal services line item. This is settlement for the water supply charge case. I don't want to call it the MTA. But it's, we settled that, and so that we paid 545,000. There were 2 checks that were sent out to the attorney for the opposing party, And that's most of the change that you see here. And then the third big change is, yes,
Can I just back up on that
sure,
point? Is that a done deal?
Or,
That
is that a done
pay
deal?
off of the settlement?
well, there's still, there will be a third aspect, which we don't have an estimate from them yet on. So there was the original Superior Court case. And we came to agreement on legal fees, but then we deferred payment until the appeal. Then there was the appeal. And so when we lost the appeal, the original case was paid off with interest. That was the first check that was sent. Then there was an estimate of expenses through the appeal, which were on the same basis and the same mechanism of calculation, but just a different set of hours. But then there will be a third one to wrap up the 4 remaining cases, the class action case and the 3 reverse validation proceedings. And that is currently still under discussion, waiting for a final proposal. So I think that in closed session, we brought you some terms and conditions, but we're still waiting to have kind of a final document for final approval, but there will be something related to legal expenses in there as well.
And do you see that kind of coming back to the board in another month or two maybe?
I would hope within a month, because we'd like to get we have to get it accepted by the court.
Yeah.
So. And that'll be the one that will also define that it's 1 year of refunds and that we have to run refund notification. So you have to notify the members of the class that they're in the class, and then they can opt in or opt out. So there's procedural things that we're going to commit to do. We, for example, don't want to reissue checks. So originally we proposed 180 days, which is kind of typical for banks too. If you present a check for payment after 6 months, they oftentimes reject it. Well, the taxpayers didn't like the short 6-month thing, and they said, no, keep this refund program open for a year, which is fine, but we're not going to chase people down if they don't cash their checks. So if somebody were to come in with a check that wasn't honored by the bank, I think we would reissue in that case, but we're not going to put ourselves up front reissuing checks and keeping track of what's come through the bank settlement. So we've got some of those details still to work out in a filing to the court for acceptance. And that will possibly allow for the legal fees to come out of the common fund. Because we don't expect 100% of checks to be cashed. So, yeah, it's just pending.
Yeah. In this video, we are including about 30,000 for legal notices. It's shown on Exhibit 5B. And then we are also including 3.3 million for reimbursing the fiscal year 23-24 water supply charge that was collected. And you can see that in the summary page 46 of the staff report.
Right.
So those were the 2 big changes on the personnel side, adoption of the MOUs, and on the operations side, the settlement of the water supply charge. And if there are the changes in settlement, I would recommend that we get the budgetary approval for that if it's not covered here.
Yeah.
So net change at 1.95 million, where is it coming from? So now I'll just go on the revenue side. We're proposing an increase of about 1.4 million in revenues, and most of that is coming from increases in user fees. So as you can see, we're proposing that the user fee the estimated user fee be increased by 800,000, so that budget will go to 7.4 million. Minor increase in the property tax collections. This is a 3% change from what we received in the last fiscal year. And then our interest budget, we are in a continued high interest rate environment. And so at this point, we're anticipating that our interest revenue is going to remain high for the remainder of the fiscal year. So those are the big changes on the revenue side. Also, we're talking about contributions from fund balance are about 600,000 higher than what we had anticipated at the beginning of the year. So between the increase in contributions from fund balance and the increase in revenues, I think those two are kind of supplementing this increase in total expenditures.
And there will be, and Stephanie, while you're still here, you've calculated the capacity fee likely from the housing part of the Marriott project, but what's the timing on that?
That I don't know, it may be next fiscal year, but they're in the planning process, so there's a large. It will likely be about $800,000 capacity fee to the district. For apartments that they're planning for City.
And so when you look here, we've included 100,000 of an increase. But the 800,000 that I'm referring to that she's talking about is not in there. So we may have a windfall for all or portion of that. But I think timing, it probably will end up in next fiscal year. Yeah.
This capacity fee, is that a permit?
That's your permit fees.
It's permit fees. It's kind of like a connection fee. If we were the utility, we probably would have a connection fee. You may recall that I think it was last board meeting, I showed how the water supply charge itself had not in 13 years been sufficient to cover all of our projects. So it's a little bit like you're buying in as a new member of the fold, paying for old expenditures of the district. So it's buying into the system, if you will. And so in an operating utility, the connection charge is typically a reimbursement for capital that you've spent. Again, buying your way into the system.
Paying your share of the capital costs.
Yeah.
Or
Yeah.
a calculated share.
And at one point, we thought about reducing our capacity fees, and then we started spending money on aquifer storage and recovery, chemical treatment building, backflush pit expansion, and then all of the front costs of the Pure Water Monterey project. So we basically, we're still 12 million behind. And so we borrowed from ourselves from other sources, rather than that water supply charge, but it's still, a pretty big investment in capital. So we got over that discussion of reducing the capacity fee, at least for the near term.
Well, it works.
Yeah.
So that's good. Let's see, so we're on.
So I have nothing further to add, except that if you look at the very end of the staff report, it shows our estimated fund balance. And at this point, we are still going to be pretty robust at the end of this fiscal year. Our general operating reserve is still estimated to be about 17+ million. And of course, this all depends on the actual revenues and expenses that happen. And so when our financials are audited, we get to the right numbers then. This is an estimate, or best estimate at this point.
I do notice on your exhibit 5C, the project expenditures, that a good portion of the 1.9 million is the increase for the Pure Water
Monterey expansion
project.
Yeah.
And it says due to higher projected spending, do they Is there more details than higher projected spending?
We can provide those details. So what we did was we reached out to the project manager and said, what is your best guess for the remaining expenditures that we'll see? And they provided us a schedule for every quarter. And so we've taken that schedule and we have added a 15% buffer, because if there's a $1 million increase, then we don't want to be in a situation where we don't have enough appropriations to pay for those. These are totally reimbursable. So that's, yeah, so you're right. There's a $1.2 million add there for that project, but that's also being offset by two things. One, in the original budget, we set aside, I think we set aside some dollars to buy 400 acre feet of water for the operating reserve. We have reduced that to 250 acre feet.
Okay.
So that's like the first item that you see here,
Right.
operating reserve. That's a reduction to the budget. And then originally for the water system expansion project, these are all the legal costs and utility, consultant costs that we were planning to have about 1.9 million for that, and that budget is also reduced by 1.2 million. So those are the two big subtractions to the budget.
All right, I have no further questions.
So I have two kind of structure of the report questions. So on page 55. And then back on page 35, are the two pages I want to compare. Let's start with 35. Okay, so the top of the head of the columns, you got mitigation, conservation, water supply. Okay, that's on page 35. On page 53, you flip conservation, water supply.
Yeah, this report's coming from our Tyler, our financial system. But the other report that you see on page 55 is an Excel report, so we can move the columns around.
Whatever it is, I just want to see some consistency when I
Right.
just.
Yeah, one's a budget report that we put together, the other is a standard report, so you're right. It's probably easier to compare if the columns were lined up, so we can flip the two columns for water supply and conservation.
And so another comment on page 56. 55, 56, yeah. And this may be, Dave, go to the strategic discussion we might have. I'm just raising a question. I did a percentage here. You got mitigation is about 10% of your operating budget. Conservation is even left around 7%. So the rest of it is 80+%. I'm just trying to get into a management mode.
And it's distorted by capital.
Yes. And I don't know where that should go, and I don't know how that discussion might take place, but it is a subject matter that somehow I'd like to pursue.
Yeah, because we actually have allocation targets, percentages. That, for example, a year ago was almost a third. It was like 35% water supply, 32% conservation, 33%. The other one, mitigation. That things get allocated. So that would be like your normal operations, administrative overhead, you get charged that way and so forth. But yeah, all of the budget that you just referred to sounds like a really small number because you're including capital. And
I know, and I don't know where to go with my little curiosity. It's more curiosity than a real question to
that's
be addressed, but.
Just one thing, if I may add, for the purposes of the discussion, we use the water supply fund like a general fund. And so the purchase of water, which is 14 million, goes into the water supply fund. And then these big projects, the $11 million Pillwater Monterey expansion, that also goes there. And so between the two, it's like 27 million right there. And then, so which fund to allocate it to. I think like the water supply fund is the right fund. Maybe it's a matter of breaking it out between, and that's what we try to do when we like summarize the totals, personnel and services and supplies, operations, and then the project expenditures is the next one. So you can see under which section those, that big variance is happening. But there's always a better way to present things.
No, and maybe not, because I like the idea that water supply is bang, it's the biggest thing we do. And I just love the idea that that's what we're working on in various ways. Yeah. Anyway, so I go both ways. Okay, so this is to recommend to the full board that we approve this budget adjustment, mid-year budget adjustment.
Correct.
I move approval to recommend to the board they adopt the budget adjustment, mid-year budget adjustment.
Second,
All in favor, say aye.
aye.
Aye, motion carries.
You got a text that the LAFCO appeal. Remember, we won in Superior Court, they decided to appeal. Just got its 4th extension for them to file opening briefs.
The extension is by the local court.
Yeah.
Good Lord.
But it's like. It was gonna be on the 20th, like 2 days, 3 days, whatever. And they just got a month extension to March 24th.
I know there's a lot of foot dragging at the state level. I just hope it doesn't spill over to our. local
No,
court.
it's foot dragging at the attorney level. I mean,
Hmm.
we're all been very courteous. You know how this works. Somebody says, "Oh, can we get a 30-day extension?" Like, sure, go ahead, because we'll probably need it at some point too. But this is the 4th extension that Cal-Am has asked for.
It is what it is. Jesus.
Sorry, that was just a little wheel turn.
I'm glad
That was a really good-
to get updated, really.
I believe in arbitration, not litigation.
Yeah, right, good point.
But one takeaway from this presentation, he showed you the general reserves about 17 million. After taking the water supply charge reserve amount and returning it. They really don't want us to get any leftover monies out of the water supply charge. So it will get rolled into a CPRA fund and eventually will get transferred out of the district. So that is a reasonable facsimile of what our position is going to be. And I think at the strategic planning workshop, we're about due for discussing, I don't want to say a hard target, but 17 million is not a big enough number for everything that we might be exposed to if we end up having to pay attorney's fees in the acquisition discussion. And I think in Apple Valley, it was on the order of 13 million.
That was a small system,
Yeah,
smaller system.
so anyway.
So if they drag, like if they get the 4th extension, this is all attorney time that they'll bill us for. We also
That's a funny one, yeah.
I'd recommend just hold this off.
Yeah, sorry.
Yeah,
It's not agendized.
yeah.
Yeah. It's a PS, but it's still not on the agenda. All right, well, thanks for sneaking that in. Okay, item number 6 is approval of second quarter investment report. This is a standard quarterly report, as I understand.
Exactly. It's a standard quarterly report and again, this is provided pursuant to the district's investment policy, which states that quarterly report we provided, and the policy lays out that, we need to provide a list of investments by par value and market value. And so that's what this report does. And the investment policy states other things too, but I won't go into that detail. What this report is showing is that, I'm sorry, it's hard to read. That about 46% of the district's investment portfolio is in LAIF. About 1/5 is in,
Just for Becca's purpose, we're looking at the far right column.
we're in the far right column, portfolio distribution, yes. About 1/5 is in the two bank accounts that we have. And then about 1/3 is distributed between bank CDs and government funds. And these bank CDs are all FDIC insured, so they're all less than 250,000. And so far, well, and then we also have California class. It's a small percentage of our portfolio, about 4.6%. Excuse me, about 1.6%. And as you can see, that we are getting a decent return when we look at the rate average for all the items. It's above 3%. And that leads us to believe that our interest income is going to be higher than what we originally budgeted.
Yeah, I didn't have any questions on this. I wish my portfolio looked like this.
You can hire me.
So I was curious about, again, I'm just a little nitpicking, I don't know what I was doing, but you got a couple of asterisks at the top right. No asterisks at the bottom of the page, but you got point number 1. I would just,
Maybe it's the PDF. Yeah, there's like the last row probably didn't get printed. I think the asterisks are related to the rate of return. And LEAF provides a daily or a monthly rate of return, and class, I think I'll have to see if it's daily or monthly. So we were trying to get to an apples to apples comparison for the rate of return, and that's what that bullet is. And if it got missed, then we'll add it at the bottom.
Okay. I hate to do what I'm
I
doing.
thought I was gonna ask for the average duration of the.
Right. We need a graph
I
for
have a
that.
question along those lines, but I'm not gonna go there. Not that. Okay, so we're going to recommend to the full board that they adopt this quarterly report on the investment report. So I move approval.
A second.
All in favor, say aye.
Aye.
Aye. Motion carries. That's the, oh, no, and then the others are all information reports.
Yeah.
That's right.
And I don't know that there's any reason to pursue this unless, Becca, you have just some questions in general, just to understand, or some fill in the gaps.
I'll just point out that we have reoriented this report, hoping that it's easier to go through it. So the purchase order, we have sorted the report from the latest purchase order number to the the furthest purchase order number.
It's
another one,
the 25K report.
Yes,
Yes, okay,
page number 63.
okay, yeah. Well, that's good to know.
So it's gonna look
Just so it's
different.
organized and you can kind of explain it a little easier too.
We've added new contracts like we have with Webb and Associates, and so those are like at the very top.
So speaking of that report, and I'm on page, 63. What's it called? Regional Water Management?
IRWM,
I
Integrated Regional.
Yeah, I love the fact that we're in a leadership position on getting those things done. But we don't always do, we don't do all the work.
No,
The cities do some of the work for the jurisdictions that are.
yeah, the current two are none of our day-to-day work. So one of them, City of Monterey for there's a stormwater interception project. And then the other one is the Carmel River Free grant. That's so the Carmel River Free is being run through the county. And then the City of Monterey, it's their own public works. But yeah, it just depending on who was in the pool at the time. You may remember like Stephanie had the HARP program for a while that we hired a consultant out of Santa Cruz to run for us. And so it just depends on whatever the the soup du jour was at the time that we pulled down the grant monies.
And the grant money itself comes through our county system, right? And then it goes back out to the cities or whatever the jurisdictions?
Yeah, so there's a quarterly billing mechanism where we get the invoice from the cities, we bill to the state, receive the funding, and then send it back to the cities. So it's all reimbursement.
Doesn't come through the district into the city?
Yeah, then so we are a pass through
Okay,
for
yeah.
these funds that are coming from the state.
okay, no, I love the fact that we're in the middle of that central point.
Yeah.
I do have one
And coordinate
question, and it's
better.
related to another committee. Item 20 is the public outreach consultant. Does this company / person meet with the POC committee? The
Mhm.
Public outreach.
That's relevant.
So that's Wellman Ad. And he will actually be at the Public Outreach Committee next week.
Yes.
Yep, giving
Okay.
an update.
Good.
And he has a retainer and then there's an out-of-pocket expense component as well.
And he's been the contractor for 3 years,
Yeah, I think,
something like
yeah.
that. Okay. All right. Information report again, public ownership expenses for this purposes. These are separate accounting calendar collection points.
Yes.
And if you want to know the total, you've got to add them up.
Maybe you should include a line for turtles, unless we don't want to highlight it.
Well,
Well,
just assume I think people can do math, so.
Right.
So we could voluntarily.
I just take off my shoes and use my toes.
There you go.
yeah, no, I think it's important to have this information because that's transparency, but I think leave it the way it is. Keeps. Anyway. They want to know, they can add it up.
But the new mayor of the city of Carmel seems to have difficulty with this kind of math as well, so.
Yes.
Landwatch has a letter out today.
Yeah, Landwatch is effectively doing some free business for us.
Yeah.
Yeah.
Yeah. So, okay, that's not an action item either. The last discussion item is the meeting schedule for this committee. So here you go. Becca,
Already calendared in.
yeah, me too.
I do have one note. I'm having surgery at the end of June. I tried to coordinate it, so I will be all ready and be back by the July meetings. We'll see how well the surgery goes.
Right.
But I'll let you know and zoom in. I can always zoom in.
When the time comes.
July is tentative, because last year it was canceled, we adopted the budget in June and it was too soon for the next meeting.
Precisely why I picked that date.
And then just for the committee's notice on April 14th, I will be on vacation, but I can zoom in.
They allow you to go on vacation.
I sneak out every once in a while.
Well, you can't sneak out now. We know when you're going.
That's why I'm telling you.
And the last little thing is probably from the GM, the draft agenda for our next board meeting.
Yeah, it's a relatively short agenda. Sarah's made a correction. I just want to highlight three items. The resolution for Fix a Leak Week is very important. Very important.
Yeah.
So that we can then, we'll probably, I think we're running a branding ad with Fix a Leak Week in March, right? So that's item 10, and then item 12 and 13. 12 is just an annual event. But there will be in the staff reports, the ledge advocacy plan for the year. So there's a couple of things we're trying to get done, but I'm now pretty sure that we want to try to get some fix on legislation for, that was the report of what we did last year.
Okay, I haven't read it yet, and I didn't know the
Okay.
connection to these two.
No, so this will be what we're planning going forward, but,
Okay.
you know, we do have a new senator that none of us have met. So we've got to just figure out a visibility plan for that at the federal level. And then job one for the year is trying to lift the cease and desist order at the
Yes.
state level.
Yes.
So
Yes.
we will have, we will be busy. And then item 13 is the action item related to the closed session item at the last meeting.
And this is the public presentation of the decision
Yeah.
of the board.
Yeah.
So if this is corrected, what was changed?
Well, there was a 14th, which was a discussion item as to how you wanted to address strategic goals for the year.
Oh, yeah, okay.
But you've already scheduled up the workshop. And so you don't need to make that
Okay.
discussion.
All right, and the special meeting is the workshop.
Yep.
And that's from 9 till, what's the plan? 2, 3?
Well, it's 9 to 2. But if we resolve everything, the last hour is there for closed session, should you need it. We'll break for a working lunch, you know, right at noon to 1, so we might be done at 1.
Yeah, and that's worked in the past very
Yeah.
well, I think.
Yeah, it may be that, you know, next year you want to mix it up and do something different because we've gotten too good at this one, but.
How much wine can you drink?
Try me.
Let the record reflect there's never been any wine at the workshop.
Yeah, that's right.
Yeah.
So no further business, no further comments from any staff and so on. Okay, meeting adjourned. Thank you, everybody.